All right, I wanted to point out in this first video, we use a gauge. It's called a seller's market action index gauge, and it's a real easy, quick look to see what's going on. And you can see the buyer's market, seller's market. You can see that right in here where you see that red mark right there, that's kind of the equalize. And normally that's when, things can take 4 to 6 months to sell, which is a normal market, which we haven't seen in a long time. But that is what is kind of the break point right there. But what I wanted to show you, and I've kind of highlighted, this right here is 2023, this month. This right here is 2022. And interest rates, inventory, and things like that, because inventory is starting to grow nationwide. And this market right here, by the way, this index covers the Wilmington area, which is primarily the three-county area, New Hanover County, Brunswick County, and Pender County. You can see right here that 68 is a huge score. This is as high as we got. And I'm going to show you, and this was back in April of 2022. This was just before the interest rates started rising dramatically. And it was also, we were kind of more coming out of COVID, and some of the folks that were relocating for COVID to get away from larger cities, that definitely petered out. And it also is kind of when people just started pushing, we're pushing prices as hard as we could go. This was the tail end of where we were getting like 20 offers on properties and things like that. So now, that was last year, or actually over a year ago. This is where we are at now. And this is where an awful lot of people are struggling. Agents, sellers, everything, understanding that it is different. Our market index now is in the 40 range. And I'm going to go into some more data and show you a little bit what I'm talking about. These lines are the last 3 years, the median price, kind of the midpoint of the price for the same geographic area. You can see that the blue line right here, this is 2021. The green line is 2022, and the black line is 2023. While prices haven't crashed or anything like that, I don't think they will, but I will tell you, this right here is the first inversion point we've seen where it has crossed. And we're seeing it more. We're seeing more price reductions. We're seeing days on market grow. We have seen, once the interest rates climbed in Q4 of last year and Q1, also this year, we started seeing builders cutting prices to move inventory that they had. So it has been, there has been a transition. A lot of people don't want to talk about it. We see different industry experts that keep saying this thing's going to ride forever, but I'm going to tell you, Buddy Blake thinks that we have reached this point, and it is time to be a lot more intentional about how you sell your house. And I've got a lot of strategies. Some of them are old, some of them are new. And I've got a whole nother video about that, or have a discussion, but because I'm not going to share that where everybody has it, because we've got some really unique things we're doing with pricing and just interval pricing and things like that, flexible commissions, all kinds of stuff we're doing that's working, and we're happy. So that's the median price. So you can see we had the inversion point. Inventory. This is what's been holding our prices up. We still don't have a lot of homes in the sub 500, sub 600,000 market in our area. But you will see right here, this is when things crossed over. You can see that our inventory started growing here over 21. We actually crossed over 21. So we're coming back. Last year, this is the interest rate rise. Right in here is, let me clear a couple of things here. Hold on. Right here at this point, this is when inventory started growing last year, because this is where the interest rate shifted. This is when all of a sudden, instead of getting a 3 something, you were getting a 6 and 7 something. So now we're seeing inventory rising again. We saw it come out spring market. We always see more inventory. We didn't get a lot more inventory, but we're starting to see this. And I think personally, you're going to see this line climb on up into Q1 this year because we got more new home construction. The permits have been pulled. They're under construction. They're coming, especially on the over 500-600 range. Those houses are going to slow in the velocity of sales. They already are. And you're just going, because people are going to start slowing down, and it's going to take longer selling houses where they're from. So they need to sell those to get the equity out of them to be able to come here. That's just the way it is. We watch the sales in New Jersey, New York, Florida, and California, and Colorado, and Ohio, and Pennsylvania. And as those sales begin to slow and inventories begins to grow, then ours is going to lag behind, but ours is going to happen too, because we're a market where people move away from things to get to us. Now, same market profile I showed you earlier. This is 2022. Okay, this is now. All right, last year in April, the median price right here of homes that came on the market was $499, but the homes that were brand new listed were $436. This year, we're at $499 and $459. Now, a lot of that is because prices have gone up. People are still pricing their houses higher and higher. They're thinking that line is still going up, still going up, still going up. That's just not the case. 2022, we had an inventory in April of 522 units, okay? And this is in the 3-county area. Now we've got 1,300. We've got almost 3 times the amount of inventory. So you can see days on market last year was around 21 was the median. Now we're up to 49 median and 79 average. Okay, now here's the big inversion. Last year, 2022, we saw only 17% of the listings go down in price, an 11% increase. If you look at this right here, this is an indicator. We're seeing more price reductions. We're seeing twice as many price reductions, and we're seeing almost almost half as many price increases. So we're just not seeing people raise the prices. Per square foot sold price $244. It's dropped $5 a foot this year. Rents, because people can't afford 7.5, or who knows where it's going, percent interest rates, you can see rents have moved over and they've gone up almost average of $200 a month. We do think that the rental market is going to soften somewhat because of the amount of multifamily that's coming online, and they are not getting their occupancy fast enough in these apartment complexes. So we're starting to see them get more aggressive, give away free rent, give away free moving, give away free storage, and things like that. So we're going to see that soften. And with that in mind, I'm seeing personally more landlords calling me. And what they're saying is, my tenants' rent is coming up, their lease is ending, and I want to sell this thing. I want to take my equity out of it now, and I want to have that ready so if there's opportunities in the future. And I do think there's going to be opportunities in the future. Now, this is showing activity. This is the tip of the spear as far as what's going on. This is no matter what company it is, no matter what listing it is, or anything like that. This is just going to tell you, and what I did is I ran it week by week. This is, and I'm going backwards in this. So in the Hanover, and this is just in Hanover County, because this software, the showing software our MLS uses is horrible, just to be totally honest. But this is as good as the information as I can get. You can see right here, there was 1,600 showings last week countywide, and which is about 4 showings per listing that was available. Average showings before something went under contract, it took 16 showings. Guys, we were down to 4 showings at the height of the market during COVID, and they would be offered 4 showings was an offer you expected. Now you can expect up to 16 showings on average. Now, lower your price, lower number of showings it's going to take, and it took 116 days on market in New Hanover County. Again, New Hanover County is driven an awful lot by Figure Eight, Wrightsville Beach, places like that, and even Carolina Beach, where we're seeing slowdown in the market. And that's another subject I want to talk about is short-term rentals. Nobody wants to talk about the little looming problem out there that the occupancy is down in much of the markets. Unless you're the cheaper ones or your oceanfront or things like that, you're seeing occupancy way down, which means the investors that were thinking they were going to make $100,000 a year, they might make 30 or 40. So, but we'll talk about that in another segment. Okay, so this was last week, showings, 1,600 showings. The week before, 1,300 showings. The week before, 1,100. And the week before, 1,400. This is somewhat seasonal, and we're kind of at the peak of the showings right now because folks, we probably have seen the maximum weekly showings right now. We're going to start to see it decline because people are going to start moving back into the school mode. Because you won't be able to, most places in the country start school sometime in August, some in September. So we're getting into that 30-day window where they need to find something beforehand. So we're at the very lagging end. If I were a home seller thinking about selling this year or anytime soon, I'd get that thing on the market in the next week or two, depending on your price range. If it's a luxury house, it doesn't play so much. But if it's something that somebody will buy, that's might have a school member or something like that, I would definitely do it. So my message today is don't overprice. Okay, I'm going to write that down. Okay, have a strategy on your pricing. Pricing is not just the goal. Pricing is part of your marketing. And in today's world of technology, where most buyers find things online, you have to understand strategy. You have to understand that your pricing has to be a strategy. It cannot be an end result. I know you wanted an end result, and then you've got to forget what your neighbor got for their house a year or two ago plus, what your friend got, or what you got for a house. Those days are over. We have a really good market. If you bought your house pre-2019, you have made a lot of money, even at today's prices. And you have an opportunity to sell your house. And if it's your primary residence and you've lived there 2 out of the last 5 years, you can sell your house with paying no taxes. Talk to your accountant. I'm not an accountant, but just you want to check on that. And even if it's an investment, still, the capital gains tax rate is very favorable to sell something and take your money off the table. Don't sell something, make good money on it because you made a good investment, and go roll it into a not great investment when a market that's shifting just to save the tax money. If you're paying taxes, capital gain taxes, that means you made money. Certainly, if you have an opportunity to protect it, you can do 1031s and things like that. But if you sold pre-2019, you made money. You're just not going to make the same amount of money that the people did in 2021 and maybe 2022. So don't be upset about it. You did well. You've done great. You will never see another window where in 3 or 4 years you will make that kind of equity again. It's just historically never happened, and it will never happen. It typically takes decades to make that kind of gain.